All right, good afternoon and good morning, depending on where you are in the world, to everybody in the session. We'll give it probably, 30 more seconds just to allow people to come in, and we'll get going. We're looking forward to today's session. All right, so let's get it going. We've got an action-packed hour or so here to chat about what we're very passionate about here at DealMaker, which is the notion or the idea of a community round, which is raising capital from your community and why that is the best asset class that you can really possibly have. Next slide. So I'll make the introductions. The star of our panel today is Jon Stidd, the president of DealMaker Reach. Jon co-founded the leading digital marketing agency for equity crowdfunding and has, over the last, 18 months, Jon raised $450 million plus for his customers. He serves as president of DealMaker Reach after Ridge Growth was acquired by DealMaker. And I will also say he is probably one of the more knowledgeable people about the space of equity crowdfunding, an all-around great guy, and knows more about investor acquisition than just about anybody else that I've spoken to. And then myself, I'm Mike Werry. I'm the VP of Sales at DealMaker, so I lead all of our revenue generation activities here. I've got over a decade of experience building and leading sales functions in both the SaaS and financial services industries, ranging from startups to small to medium-sized enterprises with over 750 million in annual revenue. So to kick it off, like the executive summary, what we're going to be talking about today, first about going to the crowd. And I think there's a number of trends that we're seeing. Obviously, DealMaker and DealMaker Reach have been at the forefront of this, which is looking to retail capital as opposed to just the traditional VC and institutional route that people take. And while we're not here to say that that's necessarily dead, and it's still a crucial component of raising capital for startups, there are many companies are finding success raising capital via retail raise, or it's called equity crowdfunding, so Reg A or Reg CF. And it's becoming, these exemptions and tools are becoming a key tactic for companies looking to build a community of following and brand awareness. And also, just to sort of add on, it's not really an either or thing. We're seeing a lot of companies look to supplement a VC or an institutional round with equity crowdfunding because of largely what Jon's going to be talking about in the latter half of this webinar, which is leveraging your customer base and your community and the power that brings. So that leads us into big part of what we're going to be talking today, which is investors as an asset class. So there's a bunch of different ways you can leverage, retail investors and individual investors as opposed to just VC or institutional. You can rent this asset class, or you can own it. So short-term cash infusions are okay with a rented investor pool, but are they really betting on your company? Like, are you really reaping the benefits and rewards of having your customers and your community invest in you in terms of average investment, lifetime value, and just building and expanding a customer and community base that can support your business as it grows? And that really drops if you're just renting it as opposed to owning. And what we're saying here is that smart brands really build their own asset class of investors.
And I'll just add on to that, Mike, that the best way to do that is the self-hosted raises, right? Because you're able to get access to that data and those email addresses to build that up for the campaign that you're raising capital for at that time, and then those future campaigns as well. So excited to share a lot of other examples of that for in the slides below.
So if we go back and we look at the evolution of retail capital raising, we look back to 2015, which is when the Jobs Act was signed, Jumpstart Our Business, Business Startups Act. So that was really the birth of equity crowdfunding, and it ushered in exemptions such as Reg A and Reg CF, which allowed companies for the first time to sell shares or securities to non-accredited investors, do so by marketing their company broadly, and raise from a whole new investor group that really had previously been shut out of investing in earlier stage startups, and also, companies who were looking to raise capital couldn't tap into them before. If we look forward to sort of 2017, that's really the rise of the crowdfunding portal. So this became a very important and powerful way in the early days of equity crowdfunding for founders to get in front of a wider audience of retail investors. This was very pivotal for seed and Series A raises. But the maximum at that time for particularly for Regulation CF was, or we can go back, was 1 million. So really capped out at the, that sort of early stage company. And really in 2019, you saw a bunch of changes, the rise of the self-hosted raise for Reg A's and Reg CFs, as well as the increase in the investment limits that we saw in early 2021 from 1 million to 5 million for Reg CF, as well as 50 million to 75 million for Reg A. It allowed for, a different mix of companies to come in, and it became a strategy that could be used to support growth and capital raising throughout really the life cycle of a company up until that point of going public. And what we're seeing now in 2022 and beyond is investor shareholder relations really making a big move online. Investors are being your best customers and your brand advocates. Smart brands are beginning to, or will begin to, own this community and bring this relationship truly in-house, with white labeled SaaS solution that allow their brand to seamlessly move between prospect, customer, shareholder, and beyond, and really taking selling securities to truly e-commerce and supporting that beyond. Next slide. So let's go through quickly the ecosphere, right? We talked briefly on the other slide about the portals. And so we sort of look at it between the Amazon versus Shopify model, the aggregators, Start Engine, WeFunders, Seed Invest, Republic, et cetera, of the world. They are the Amazon. So you go onto their site, you see, dozens or hundreds of different raises in different companies. Every company is competing against each other. So you're listed amongst your competitors and about very different brands. And it's a commodity. It commoditizes the company, right? Your customers are everyone's customers. The customers that you bring in are also retargeted for other raises. And so they're not truly your own. It doesn't foster investor loyalty in the company and community growth, which is really what Jon will be talking about later on. And that's where we moved into the self-hosted raise, which started to come about in 2019. And that's really the Shopify model. So it's empowering companies to set up their own store on their website for selling securities in an e-commerce fashion. It allows you to stand out from the competition. It puts your brand and your company as center stage, and it really does foster that investor loyalty and community growth.
And Mike, I'll just add in there that, before DealMaker Reach was DealMaker Reach, right? We were the Ridge Growth Agency. So we had run campaigns across all of these different platforms and saw that firsthand. So, when our partnership started before the merger, right, it was one of the things that our team loved was just the amount of data that you get and build in this, self-hosted owned brand experience where you get to control that from end to end. So it looks great for the brand, but it's also good for the brand in that they get more data, which powers their raise and builds their community better, which powers that raise and the next one and the next one. So I just wanted to touch on that there as well.
Perfect. Next slide. So let's talk about sort of the trends that we're seeing right now, right? Like, as I think most of the people on the webinar will probably recognize, right? The private equity, venture capital, institutional deal volume has really, felt the bite of higher interest rates, and while they've been and their rise over the course of the last year. So Q3 activity is flat to slightly up compared to pre-COVID. But deal volumes have really hit a wall in August and September, and the decline went beyond a typical seasonal slowdown. So deals slowed by 20%, and even though the count was running ahead of 2021's frenzied pace, even though the count was running ahead of 2021's frenzied pace for the first 7 months, but we've also seen a big change and a big pressure on the terms, right? Valuation, equity stakes, are making VC deals less attractive for founders. Other factors is that the frenzy is gone. Deals are taking longer and longer to close, and this costs founders and CEOs time and money to fuel the growth and maintain their business. So, that's sort of what we're seeing here, right? Like, the total funding is down to $74.5 billion, which is a 9-quarter low and a 34% drop from Q2. So, and that's what I was just sort of saying. Like, the institutional capital is largely being held. They're trying to avoid a down round. And so reinvestment into companies or investment into companies that were previously raising at a higher valuation is something that they're going to take a wait and see approach. There's a huge amount of dry powder in the institutional side, but we're projecting that and the experts are projecting a wait and see approach versus deployment. So it could be a long period of time before we see VC investment trends continue to tick up. But on the flip side, equity crowdfunding is still gaining quarter over quarter and year over year. Valuations, although dropping in Q2 of this year, have continued to have jumped back up and are continuing to steadily decline. And the number of deals and the volume of investment has continued on. I believe it was in September, one of the most challenging months for the markets overall. Reg CF had one of its best months ever in terms of capital raised. And so, the three takeaways from this analysis, like, one, VCs are going to do a wait and see approach. LPs seem to be putting little to no pressure for the deployment of capital. And that's likely to continue. The exit pause will continue. So, there's not a lot of desire to accept lower valuations. So the prediction that exits will continue to be slow into Q4 and probably beyond. And alternative risk and reward investments are being sought. With the public market soft and particularly volatile for the course of the last year, a lot of investors, particularly retail investors, are seeking alternative options that private deals present, and this we're seeing, deals in the equity crowdfunding space continuing to perform. And with these headwinds in mind, it's really more important than ever to be leveraging your community to raise capital, because we're seeing great success even in a very difficult market in the traditional sense. So with that, I will pass the torch over to Jon to carry forward with talking more about community rounds and what they really mean.
Thank you, Mike. All right. What is a community round? So I had mentioned DealMaker reaches past life as the Rich Growth Agency, where we were specialized in e-commerce marketing. So, helping companies grow their e-commerce businesses and scale online, right, through, their Shopify website. So one of the, KPIs that we were always looking at was, how much are people, subscribing to the email and then, repurchasing from email, right? Like increasing that lifetime value of a customer because you own that audience, right? You do want to capture their purchase, right? But ultimately you want to turn them into a brand advocate who, every time you send out an email, they will buy from the brand, right? So that's essentially what we're doing in the capital market space when you think about these campaigns as community rounds. So, tapping into an existing audience or one that you're currently building to raise capital. So this approach extends a company's relationship, right? You're creating a very one-to-one relationship with your community of investors and potential investors, right? So when you do that, right, when customers or users or fans, right, are investors and vice versa, you supercharge those shareholders. You turn them into brand advocates. So they may invest in that round and continue to invest. So you get those repeat investors. And as an example of that, and this may sound on the extreme end, but companies get this outreach. We're working with a med tech company right now, and they'll get weekly emails from people willing to be the test subject for when their technology is ready. So people literally willing to go under the knife for this company because they're shareholders. They have a vested interest in the future success of this. So those are some of the exciting aspects that we see in community rounds and why we're excited about this as a means of raising capital when companies think about this as a series of successes raises where you can tap into your community. And some of a slide below will give a case study for what one of those examples is. Right. So this is a modern company movement, right? So I mentioned our roots in direct-to-consumer marketing, right? So digital advertising online through Facebook, Instagram, TikTok, right? What we're seeing now here is a shift in privacy and some of these tech companies sort of battling, right? Where Apple released ATT, right? So app tracking transparency. It's a much longer conversation, but it cut off a lot of data, right? It gave just another example of why it's so important to own your audience so you aren't reliant on other platforms, which is certainly the case as we leverage digital marketing for raising capital. But it's also a good example of why just owning your community and not relying on a platform for their audience is so important, because when you don't own that relationship, it can be cut off at any given time. So the companies that we talk to that really understand this are excited about this aspect of sort of future-proofing themselves for this, right? Additionally, we mentioned the brand advocacy above. Maybe not everybody's willing to go under the knife, but when you have this built-in community, they do have a vested interest in the company's success and amplifying the brand, right? Whether that be a future investment or a purchase from the company later on, that's a product or service that you're offering. There's also the deal term aspects, right? Mike's often talking with potential issuers about this, and what DealMaker focuses on is really being investor friendly, right? Which often also means that founders are able to receive more brand friendly terms than you would elsewhere in the capital markets.
Yeah, and I think that's an important point, John. Like, I think we really try to be founder first here. We don't prescribe, security types or offering types. We allow the founders or CEOs to choose the terms in which they offer the deal, both in terms of price, in terms of security type, whether it's equity or debt, share class, all that sort of stuff, to make sure that they, put themselves and their companies first. And allow them to sort of maximize the opportunity, which often they don't get from some of the traditional routes of VC or institutional capital.
Yeah, and we'll touch more on the valuation aspect of that as well, because that's a good point, Mike. All right, so back to the data point that I mentioned on the previous slide. data is a differentiator, right? With a self-hosted campaign, you're going to collect more data, right? And data, euphemism for email addresses, names, and phone numbers, right? You want to have as much access to that as possible so that you can build the community and also that you can nurture that funnel more effectively, right? Because as you are raising capital in this way, right, there will be people who start the process and finish the process, but you need to be able to work them through that funnel. That could be a phone call, it could be a webinar with you, right? Sometimes people just have a question about future use of funds, or how does this work, right? Or you'll get a very technical investor who's in the space and has questions about the IP and just really wants to talk to somebody. So when you own that funnel, you can nurture it more effectively through any number of means, whether it's digitally and retargeting them or actually getting on a call with them, which allows you to create this one-to-one relationship with your investors for this capital raise and future potential raises as well.
And I think, just to add on to that, from Jon's looking at it from a nurturing and funnel conversion perspective, I'm looking at it on that side as well. But I think one of the things that we've really done here at DealMaker is emphasize and enable our customers to leverage best-in-class data and analytics. That goes from everything from demographics, real-time investor data to see your funnel, to be able to manage follow-ups, to track and see performance of different marketing efforts, and understand the value of each customer, understanding your community and their demographics, which is it's instrumental and very powerful in fueling a successful raise.
Yeah, and that's a great point. I'll just add to it that with the CRM, when you have access to this, right, you'll be able to see, what stage any given investor is at. So I talked about it a little before. Maybe they need a call, maybe they're going to get on a webinar, right? But it could just be, they haven't signed the docs. So you're able to reach out to investors who are at critical stages and get them over those humps. So here's why data is important, right? To take a potential investor from this awareness stage down to advocacy and investor, it requires data and knowledge and being able to transparently see where everybody is in this funnel. So there's a lot of marketing jargon on this page. So this slide's a little bit more of a snoozer, but it's important to think about how this funnel is shaped like this, and you go from awareness to advocacy, but you can't get somebody to becoming an investor without the nurturing and the steps in between. So we know what the touch points are and what is getting people over the hurdle, and the data behind that, being able to see what any individual ad is doing to drive capital to the campaign, or what an individual email campaign, because you could see, a certain type of message resonate much differently at certain points in the funnel than you may at the top of the funnel. So we're able to use that data to come up with more tactics to help, drive people from awareness to advocacy. So I mentioned this slide being a bit more of a snooze. This next slide is a more fun visual of what that looks like. So, tactically what we're doing is taking eyeballs from the internet. It could be, TikTok, Facebook, Instagram, Google ads, right? Taking these eyeballs and driving them to this brand own experience. So you can see this example here for Monogram. What we're able to do, showcase that the campaign is oversubscribed. We've got the countdown timer on there. We're able to obviously track the traffic that comes to this page, but more importantly, as they begin this checkout process, it's a branded experience, and we're capturing this data immediately, right? Because you can't build community without capturing that information. And that's the power of a self-hosted raise right there, where you get this data. Now this is your data, this is your community that you are building. And the power of that, if we look at this sort of infographic as it extends to the right, so I just signed up there and I'm thinking about this. So what are these individual educational touch points that are going to get me over the hurdle to driving an investment, right? It could be an email, it could be a webinar, it could be an SMS update, right? But if you don't have access to this data in the funnel and you're not building your community in this way, you won't be able to convert these potential investors and then take those learnings back and say, okay, here's what we can do in the funnel through automations, right? Email, SMS, webinars, and drive those investments. So in that sense, it's a virtuous cycle of how we're able to use this data. So the power of the self-hosted raise is data, but that's twofold, right? It's the data that you get for this current campaign, but you're also able to build a much larger community much faster when it is self-hosted because you own this data all the way through that marketing funnel. All right, so here's the case study that I had mentioned before. That's a good example of the power of community, right? So again, back to before, when we think about community, an investor of yours, that could be Jamie, but Jamie is also an email address. So, let's think about community as a euphemism for email addresses, because we're going to be talking about email addresses on this slide. So what you see here are these successive campaigns from the issuer. So from left to right there, the total amount raised there in gray, and then what they were able to drive from their own audience that's there in green, right? So if we look at the 2020 campaign, we see that 21% of their raise was driven from their own list, right? And that list grew, it grew by 50% over the course of that campaign. So they're growing this community that can then power this next campaign, this 2021 campaign. And when you grow it in that way, right? So the email list contribution here stayed the same at 21%, but in absolute terms, right? This email list drove over $5 million to their second campaign. So when you're able to harness your community this way and go to them to raise capital, it empowers a number of things, right? You can launch early bird reservation perks to this group, right? You can do a test in the waters to see if they are interested in investing again, right? You can also leverage this list for retargeting. So, in case they're not in their email, you can, upload that email list to one of the advertising platforms and be sure to get in front of them there. Or slightly more technical is take a lookalike audience. So it's going to say, hey, here's the digital footprint of our investors. Find more people like this, right? Which is what we did in these successive campaigns when we went and raised more capital, leveraging that data to say, hey, find investors who look like this. And oh, by the way, we had the capital to go advertise to them because the initial email outreach helped spur some of that funding. So you bring this capital in the door, and then you can leverage that capital to supercharge your advertising. So an important component of that. And just as another anecdote here that's separate is that there's a Reg CF that's ending this week that we're running. This is their third campaign. So Reg CF is up to 5 million. We're going to fill about 75% of that round strictly from their community, right? So that's the power of the community when you build that up over these successive raises, but also when you engage them in between, right? You can't just, call people when you're asking for money, which is why DealMaker has also built out DealMaker Engage, which allows issuers to communicate with shareholders and their community members, not just during a campaign, but between campaigns. So you can send monthly, weekly updates, frankly, however often you want. We do have some tactics around that. But when you engage your community properly during that time, you're able to reach back out to them when it's time to reinvest, and they're excited for this next opportunity. And if we look at these opportunities here, this series, specifically for the company in this slide, they were able to raise this at successively higher valuations, right? So Mike had talked about, DealMaker's founder-friendly attitude, right? When you engage your community this way and own this as opposed to renting it, you're able to harness them. And, all of these people are excited to invest in this next round that, again, are at successively higher valuations.
Yeah, I was gonna add on that. So I think thank you for adding that point in. I think that the power of the community does a number of different things, and we see this time and time again. It supports higher valuations, and because you're investing from a community of people who are really engaged in your business, it does support higher valuations than you would normally get from a traditional VC firm or institutional investor. But these are people who are really there to support the growth and foster the community. And I think one of the things I was thinking about as you and chatting, John, is, there's a lot of power. A lot of people can see the direct correlation between something that is a business that's a bit more consumer facing, right? So like building a community directly from people who can buy your products, right? So I don't know, drawing a blank, but one of the, there's a number of great consumer brands, whether it's a shoe company or something like that, they're raising awareness for their business. That investor then starts to purchase their products, and it becomes a virtuous cycle. And as Jon said, as you engage with them, not just to bring them into your community, but throughout between that period to make them truly feel like they're a stakeholder in your success, they're more likely to invest at higher amounts and continue to purchase those products. So you've got a customer for life and an advocate for life. But it carries forward for B2B brands as well. We've seen some great successes. One of the ones on an earlier slide, some of the success stories there was, that I've heard about from companies is we've had institutions and, prospective buyers that are more, big business buyers see the advertisements for the raise, get really intrigued, invest themselves as an advocate, but then help to support the launch of that product or the purchase of that product from a B2B perspective. So it does carry forward in a big way, and it's not just the D2C brands that get the lift of the customers and the advocacy.
Oh, certainly. That's a great point. And just back to that as perks, and there will be investors that do become a customer in some way, shape, or form, right? But we can also leverage perks as a part of that to help drive that. So if you invest, you also get a subscription to the product, right? So finding ways to weave in that story and make investors customers and vice versa to really supercharge them as brand advocates. And in this whole story here, it's important to note that Mike talked about carrying over from one campaign to the next, right? So, not everybody in that first campaign that's on that email list will have been an investor. So when you keep this audience warm, right, you're able to continue to engage them and, sending out product milestone updates, right, in between raises. So by the time your next raise is live, what you're able to do is come back to this audience and say, hey, remember when I told you that we accomplished XYZ, right? We did all of that, and we're running this raise again. And now the valuation is X plus, versus the last campaign because, we've achieved ABC milestone, right? So you have this community of investors and onlookers, right, who may have just missed out on the last campaign. So you'll see a big push to get in the next campaign, depending on what some of those updates are. And that's really the power of, when we talk about community, it's sort of, watchers and investors, right? But when you own this whole community like you would in a self-hosted raise, that community is much larger. So your potential pool of investors for this campaign or the next campaign is much bigger. So it's not limited to just your investors. And as you're giving updates, you're speaking to both parties.
Yeah, and actually, just to add on to that, Jon, if we remember back to one of the earlier slides where we sort of looked at the differences between the two models, the Amazon model versus the self-hosted raise. The self-hosted raise, via DealMaker, anybody who enters your funnel or who clicks an ad and you get an email address, you retain that and you own that. So you can nurture them over time. They may not invest. They may become customers. They may be added to a beta list, or they may be, interested in buying your products from a B2B perspective, but you can nurture them over time. What we're seeing here is the improvements over time in monetizing that list and that community. If you go with the portal or the Amazon model, generally you only get access to the investors who complete their investment. So if you think about, if your funnel size is 40,000 people and only 10,000 end up investing, you're losing 30,000 email addresses that you can leverage, not just between raises, but leverage over time to cultivate into potential customers. And that's something that's very powerful here.
Mike, do you want to jump into some of the questions that we've collected in the side chat here?
Sure. So the first question that we received is, does DealMaker outsource marketing campaign efforts to another company in any way? If so, what businesses do you partner with? I can jump into that. Right, we have our own in-house agency, DealMaker Reach, which obviously pretty biased here. We love and think is the best of the best, but we also have a roster of 20 other marketing partners that we work with on different raises. That as somebody gets onboarded as a customer, if for whatever reason there's another partner that is a good fit for them, we're happy to support that. But we're always looking for additional marketing partners in the space. That said, obviously pretty biased on DealMaker Reach.
Yeah. So DealMaker Reach, we do everything in-house. So end-to-end for the campaign, a team of around 35 people, designers, developers, strategists, right? Paid media marketers. Oftentimes there is a storytelling component to this, right? So there's and video, right, can be an important aspect of that. So we don't have the full in-house team to create these big long campaign videos when we need them. That's expensive overhead and some specialties. So when we need to do that, we actually work with a favorite partner of ours, Rally On Media, and the team over there. There's really great storytellers that we bolt on to. But in terms of the digital marketing, we keep that all in-house because it's so important to have a really tight feedback loop of the data and with our product team, and keeping that all in-house as opposed to ever trying to white label anything.
Yeah. The next question, how do you determine the higher enterprise valuation? Actually, I'll say my piece, but Jon has a really good model that he has that helps companies to look at the valuation, which also kind of ties into the next question about the process behind establishing valuations. So we're not experts at DealMaker in terms of determining valuation. We don't determine valuations. That's up to the company and any outside advisors that they want to use. I would say, though, that when we look at it and you look at the VC world or the institutional capital side, the terms tend to be somewhere in the form of they want 20%. And they want that 20% to be invested at the lowest possible. They want to get that 20% equity stake at the lowest possible valuation that they can get, and often that comes with several different board seats. The difference here is that the founders can set the valuations that they want, the equity stake that they want to give out, and on top of that, with Reg A and Reg CF, you're not giving up board seats. You're not giving out additional control into it. But Jon, I know you have a good model that sort of helps to support thinking around valuation multiples in whether it's Reg A or Reg CF.
Yeah, and I'll just add there that oftentimes what we can do is, project based on the benchmarks that we have what a campaign will cost. And then there's ways to bake that into the valuation where that marketing spend is accounted for there. But to Mike's point, we don't do the actual sort of valuing of the company, but what we can do is offer a sort of helpful list of examples that we've seen be successful in the past.
And so I would say that like the other question was the valuations and how they might differ between a Reg A, a Reg CF, and traditional financing. So like traditional financing, you can think about that as VCs will invest from seed all the way to series D, E, F, G, H, and so on, depending on the company. Where you sort of tend to see Reg CF as the more common approach is really in that sort of like seed to Series A stage, right? And places where a cap of $5 million is going to be appropriate for the valuation that the company has. And then as they move on to Series B, C, and so on, you start to see the migration more so into Reg A, which supports up to 75 million in capital raised in a 1 year period. John, if you got anything else to add on to that, please.
No, nothing else there.
So, do you have any completed campaigns from Black founders? John?
Yes, we do. We've run 2 campaigns for a company in the biotech space, right, as well as a company in the B2B SaaS space. So certainly.
Yeah. And on the DealMaker side, even excluding DealMaker Reach, yes, absolutely, we have done a number of different raises with Black founders. Next question. I'm not sure exactly about this one. So what is the ratio of people you reach and collect an email for versus those that actually invest?
Oh, sure. Yeah, I've got some decent benchmarks on this. I think the investor size is usually about 1/15 of the email list size, right? We've seen that hold true in some cases, right? It's fairly steady. So about 1 investor for every 15 emails there, which is again why it's important to be able to capture the full scope of that community who can be in that. So when it's self-hosted, you get more of those email addresses. So it's more opportunities to turn them to an investor because it widens that sort of top of funnel net. And again, the sort of successive raise model of doing this over the course of successive raises means that just because they didn't invest in that first round doesn't mean that they're not going to invest in the second or third. Those benchmarks can be a little bit skewed depending on where the primary source of traffic is from, but I'd say about that 1 to 15.
Yeah. Actually, okay. So what about media communications and the validation of this, as it takes years of journalism and media relationships to build that up? Your thoughts there, John?
Oh, yeah, we've done a lot of campaigns that I would say, dry start, right? Cold start. They, this was their first time out. Monogram's a really great example of that, right? They obviously existed before we started marketing for them, but they weren't marketed, right? They're one of their first websites was the ones that we built for them, so they certainly weren't well known in the space and out there beating the pavement with marketing and journalism and PR before that. Frankly, they had none.
Yeah, and I think we've seen this before too. Like I've seen a lot of companies who are exactly that, a cold start. You Google the company and there's not a whole lot out there. And obviously, the more information that's out there to validate, that supports the investor education and their awareness consideration process. But that can be supplemented through the raise, right? That can be driven through the marketing and communications that are put out during the raise. And there's a lot of issuers who choose to tack on a PR strategy to this to supplement communications, whether it's wire releases and other sort of promoted stories that can circumvent. I understand the challenges with building up media relationships and journalist relationships there. And then, so another question, the SEC allows a Canadian-based issuer to perform a Reg A in the USA. We cannot perform a CF round in the US. Is DealMaker able to host a Canadian CF round for Canadian fans or end users? So you're absolutely right. Reg A is open to a Canadian business, but a CF is not. DealMaker doesn't host Canadian CFs, but what we do host is offering memorandums, which sort of are a similar product, allow for marketing and for retail investor participation. It removes some of the limits that you have in Canadian crowdfunding, which is roughly 1.25 million, I believe it is. So an offering memorandum allows for a technically unlimited amount of capital to be raised, and so that's the exemption that we use in Canada for engaging Canadian fans and end users. And we've seen actually a lot of success with Reg A issuers from the US tapping into their Canadian base as well, using an offering memorandum to add on Canadian retail investors to their Reg A. So I'd be happy to chat more about that in detail if you would like. One of the things that I may have completely forgot, if I said it and I'm drawing a blank, then let me know, John. I was thinking about that earlier because we were talking on one of the first slides about exits and the likelihood of exits being down in the short term, right? So liquidity events and that sort of stuff. One of the things that we have seen is on the B2B side, particularly, we've seen actually very recently a webinar for a customer who has completed several different raises and built up a fairly sizable community in the B2B sector. I think half of the attendees or something of that range on their most recent webinar were actually from potential acquirers. So maybe not something that every founder or company is looking for, and it may not be looking to be acquired. But we do see the power of the community and a community raise in being able to provide additional opportunities through things like an acquisition that may not come about, had they not done a community-based round. So if there's any other questions, please feel free to pop them in. Happy to stay on and answer for a few more minutes. We've got 10 more minutes allocated, but if not, I will ramble slightly, to close this out to see if there are any questions that do come in. But if there are not, please do not hesitate to reach out. You can reach me at mike@dealmaker.tech or Jonathan Stidd at DealMaker.tech, Jonathan.Stidd@DealMaker.tech. We'd be happy to chat and make sure that you're in touch with the right people to discuss a potential raise or any questions that you have about this. But thank you very much for a great discussion and listening to and learning about a topic that we are very passionate about here at DealMaker.
Right on. And I threw my email address there in the chat. Thank you, Mike. Thanks, everybody. Pleasure.
Thank you.